What is going on, investors? Hopefully guys are doing well out there. Time to keep earnings season moving right along. Take a look at Lockheed Martin Corporation, ticker symbol LMT. We haven't looked at this stock in a little while, and it's done actually tremendously. Over the last year, up 20%, and over the last 6 months, paints a similar story, up about 12%. The stock's performed relatively nicely. And then when we come over here and look at this from a technical, this technical setup is as predictable as it gets. So we'll certainly talk about that towards the end of the show. The other thing that we'll think broadly about on today's show is obviously this stock, a lot of people kind of rotated into this stock over the last year as the S&P and bonds and pretty much everything kind of fell to the ground. A stock like this actually soared. And so we'll see if the rotation into this stock holds, if this stock can continue its momentum, its upward momentum. Talk about that on today's show, but we'll talk about it in the context of the Q4 earnings, which came out before the bell. You had roughly $19 billion worth of revenue over this company, 7.1% year-over-year growth. It beat expectations by about $740 million. Now, when we come over here and look at this kind of from the full year outlook for this company, over the next 2 years, the company is actually going to be somewhat contracting, but the CEO noted that the company will go back to kind of growth mode in the upcoming years, and we'll see it from a backlog perspective. The company has a tremendous backlog of business. Now, the think tanks in Washington are always going to tell you that the U.S. defense industry isn't ready for some kind of conflict. They're always going to tell you that the country isn't ready for this conflict, doesn't have enough of this, doesn't have enough of that. That is because the think tanks' bills are being paid by the Lockheed Martin and the other defense contracts out there. Whether or not there's a grain of salt and truth in this, probably in the shorter term it is. Certainly if the United States gets into any kind of conflict with anybody, they can divert resources likely faster than almost any other country in the world. Now, when we look at companies like this, it's very much tied to government, because I'll scroll through all the government contracts this company has signed very quickly over the last quarter. It is tied very much to defense spending over in Washington. And now it appears that the House Speaker, which is newly elected, House Speaker McCarthy, I believe, out here in California, a deal to get him elected was set to cut spending. Now, here's the thing that you always want to take in mind with any politician, whether or not you're a Democrat or Republican, which side you root for, it doesn't really matter. I wouldn't believe, as an investor, you can believe what comes out of their mouth as an environmentalist, as a socialist, or whatever you want. But as an investor, I would never believe a word that comes out of any of these people's mouths until it's actually on the desk of the president and signed. So we'll see if defense spending is actually cut. We'll see if that actually materializes over the next couple of years as he holds the House speakership for at least, I believe, 2 years. Now, here's the thing about Lockheed Martin. They're constantly bagging these United States defense contract. Here's one with the U.S. Army. Here's another one with the Navy. I mean, I'm going through these very quickly. It's almost comical that if you follow Lockheed Martin, you get a press release basically every week of a multi-$100 million contract. Now, these are secured, and then obviously they have to be delivered over a relatively long period of time, especially when we're talking about aircraft and some of this other stuff. But eventually, they finally get to deliver these types of things, and they cash the bag. Now, come over here and look at these financials. You will see that when you deal with the government, it's not necessarily the most high margin business. So off of, we'll call that $19 billion worth of sales, take a look at our cost of sales. It was nearly $16.7 billion. That gave you gross profit. These aren't tech margins, okay? These are manufacturing type margins. So I don't want to make it seem like these are low margins, but when you follow tech companies and you're used to these high gross margins, that's not what you typically see in the manufacturing business. So off of $19 billion worth of net sales, $2.3 billion worth of gross profit. Now, here's the deal with this company is they do a fantastic job flowing most of that down to net income to the tune of $1.9 billion in the most recent quarter. When you look at the full year, you had, we'll call that $66 billion worth of revenue. Again, down year over year, but the company did a nice job in still clearing a fair amount to the net earnings side, down from 6.3 down to $5.7 billion. Now, the company is aggressively buying back shares. We'll see that when we get down to cash flows. So that is propping up your diluted earnings per share. As your earnings start to go down, but you're dividing it by a small number of outstanding shares, well, your EPS is not decelerating quite as fast as it would be if you maintain that share count or it continued to move upward. When you come down here to the balance sheet, things look pretty good, okay? They have some cash and cash equivalents, not a mountain of it, but they have all these contract assets, which they recognize here on the balance sheet. I'll also show you their backlog of business, which is very impressive as well. Move through to the liability side. They have taken on some long-term debt over the last year from 11.6 up to about 15.5. But overall, your total liabilities coming in about $43 billion. Your total assets coming in just a shade under $53 billion. Here's where you really get a good idea into the company is the statement of these cash flows. So we pull down the net income. Again, this is going to be for a year ended. Last year, you earned $6.3 billion. This year, it was closer to about $5.7 billion. You do have a relatively large depreciation and amortization as they're building these types of things. I can imagine there's, different types of equipment that they have to produce and materialize in order to manufacture these types of things. So you're depreciating that over a period of time. Get your net cash provided by the operating activities, and it paints a similar story over at Lockheed that the next year, probably 2 years, going to be relatively flat, if not down, on the cash provided by the operating activities, down from 9.2 down to about $7.8 billion. But again, the company does such a nice job. Look at capital expenditures. They almost spent nothing over at this company, just $1.8 billion. So of $7.8 billion worth of positive cash flow, you spent just $1.8 billion on investing activities. And here on financing activities, you see a little bit more activity. So they issued some long-term debt at about $6.2 billion. You repaid some long-term debt at about $2.2 billion, but you really did it to repurchase the common stock at about $7.9 billion. And then you paid a shade over $3 billion in dividends. So off about $7.8 billion worth of operating cash flow, you spent almost $11 billion just buying back the stock and paying dividends. Very shareholder-friendly company on a company that's probably also, quote-unquote, too big to fail. The United States government is just simply not going to let a company like this fail, and so you get the benefit of relatively solid management, solid cash flows, solid earnings. So there's a lot of shareholder-friendly stuff going over at Lockheed Martin. Now, the other thing that is very shareholder-friendly, they got this backlog of business that they're continuing to have to work through as these government contracts likely have to be funded. The money has to come through. There's obviously some lead times and the material costs and all those types of things to build these things out. And finally, a delivery date, as you see aircraft deliveries over the quarters, stays relatively steady year over year. There's only a certain capacity in terms of the budget, in terms of deliveries, but the company steadily delivers things. But you see the total backlog of business over this company, nearly $149 billion on a company worth just $115 billion. So there's certainly some value there. And again, the company is very, very well run from a lot of standpoints. Now, when we come over here to the valuation of Lockheed Martin, it's still pretty priced to perfection, I would say. Anytime this thing gets over 2x sales, I've got a 10-year chart of Lockheed Martin, and we'll see more evidence of this when we get to the technical chart as well. Anytime you get close to 2x sales, and right now we're at 1.83 times sales on this company, and that's on a trailing 12 months basis. But when we looked forward on those earnings, they were basically either going to go negative or stay flat. So you can kind of look at a trailing 12-month period of sales, and really you're looking forward as well. Anytime you're kind of up in this, 2x-ish sales, it's not the best value. And in fact, this company just can't really push through 2x sales. But anytime you drop back to about 1.5 times sales, that has been a buying opportunity. When we come over here and look at it from a technical perspective, we're on a weekly chart with Lockheed Martin. It goes back over a decade or so. You're seeing we're in a very steep uptrend. Anytime this stock is pulled back to this green trend line, that is also coincided with the fact that the stock has pulled back to about 1.5 times sales. Anytime this stock is kind of topped out, I guess you can draw kind of an upper channel here. Anytime it's kind of topped out at this upper channel, that's when it's approached closer to 2x sales and investors decide to peel this off. I think it's pretty simple with Lockheed Martin. You can buy the dip on this green trend line. I think more recently, there's been a clear area of support / resistance right here on this red line. And we'll call that, we'll upgrade this to about $400 per share, just to keep the numbers really simple. There's an area here lower at about 325, but we're a mile away from that share price right now. And if you break down to 325, you'll essentially broke broken this decade-long uptrend, so I wouldn't really be excited from it from that perspective. But I tell you what, with Lockheed, if you get a pullback right here from 442 back to this trend line, somewhere in, it would probably be like the 410 area, I would be excited about this stock. I would probably step in and buy that, but at the same time, I'd have a stop loss, some here, $400 on the dot. If you want to be conservative, a little more aggressive, you could drop it down here to maybe about 380, because you would not really want this stock to break this longer term trend. If it breaks this longer term trend, it actually could be predicting that we're making kind of a topping formation here. But right now, we're not seeing really any evidence of that. In fact, the more higher likelihood is if you get a pullback back to this green line, you could potentially have a rally back to the top of the channel, which at the very least would take you up about 20% to a top of a channel. You're looking at more than a 40% rise. I would personally take profits on this one, but it does pay a very healthy dividend of $12 per share. That's about a 2.7% yield on this one. Obviously, if it continues to pull back, you'll get a number closer to 3. So I wouldn't blame somebody for kind of buying and holding this for the longer term. You have this large backlog of business, and then you have this military complex here in the United States that is constantly being reminded, hey, we need new aircraft, we need more bullets, we need all these types of things, and that kind of feeds the defense industry. So despite there is rhetoric that you might see a cut in spending here, it hasn't materialized really in my lifetime. Doesn't matter if it's a Democrat or Republican. And until I actually see evidence of that, I will assume that defense spending just continues to go upward, and that obviously will continue to help Lockheed Martin and likely contribute to this decade-long uptrend continuing for the stock. Hopefully you guys enjoyed today's video. I'll be back again later today with more. Good luck with your investments.